Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond. It is at current 6 o'clock in the morning, Eastern Standard Time. Happy Friday. Let's get to it. The headlines. We've been pounding the table for several weeks now with regard to the amazing short-sightedness of the Web 2.0 companies. And the drumbeat continues. One day after Jack Dorsey gets done testifying in front of Senate committees, he bans Alex Jones from using Periscope. Now, Twitter was the final major Web 2.0 company that would host Alex Jones's content. Now, this is not going to be a conversation about whether or not you agree or disagree with Alex Jones. It's whether or not these companies are biased, whether or not they're alienating half of their potential customer base. That's issue number one. Issue number two, are they attracting government attention? And why does that matter? I get a lot of comments about, Bob, can you please stay away from politics? Just focus on the stock charts. Focus on the companies. I am. I'm not talking about whether or not I agree with their policies. As a shareholder, I disagree with them being divisive and ticking off half of their existing customer base. I'm not talking about whether or not I agree or disagree with Alex Jones, but he does have a right to be heard. This is, after all, America. Next article up. 1 in 4 Facebook users delete Facebook app as millennial exodus continues. And here's the funny part about, and I don't mean funny haha, funny ironically, is that the data from this survey revealed that both Democrats and Republicans are equally likely to have deleted Facebook's apps or slowed or stopped their usage of the platform. As a shareholder, were I a shareholder, we're actually short of Facebook. So we're going to look to book profit soon. That's the only reason why I'm mentioning it. As a shareholder, I would be completely ticked off with management right now. But there hasn't been enough pain in the share price yet for there to be a realization that they are doing something wrong. Lastly, back to Jack Dorsey. Another headline. This is all in one day. Dorsey admits Twitter unfairly shadow banned 600,000 accounts. So he goes from saying his algorithm is purely impartial and does not discriminate against conservative voices to Dorsey admitted to lawmakers that his platform unfairly reduced the visibility of 600,000 accounts, including some members of Congress. That will attract the attention of campaign finance regulators. Because if you're shadow banning conservatives and Republicans, that means that you are by de facto lending support to another party. And if they're doing it, and if they're shadow banning Democrats, well, the same thing holds true. They shouldn't be doing it. This is completely outrageous what they're doing as managers of some of the most powerful companies distributing content in the world. I've used this word before, and I'll use it again. It is corporate malpractice. And when you take a look at the share price, let's go to a weekly chart. Let's see how Alphabet, Google did this week, down nearly 4% on the week, and it appears as though we are going lower. I warned for weeks, a breakdown below the 1204 level would be disastrous for Google. We have now put in lower highs. We are now putting in lower lows. The week is not over. Perhaps we'll rally back and recapture the 1204 level. If we do not, I would expect a continuation breakdown in the coming weeks. Twitter, down nearly 6% yesterday alone on a weekly basis, down 12.42% on the week alone. We don't even want to talk about how much they're off the highs of the year. This week, we have now taken out the lows of July, the week of July the 30th. And if we close down below 31.07, in all probability, we are going lower. And we'll see 28.14 to 26.60 before we finally bounce. Facebook, of which we are short members, we may be booking profits today. Down over 2.75% yesterday. Weekly chart, a disaster area. We broke down below the July lows. It appears as though we will close there. We could rally back, of course, one trading day left to go. But I think that before all is said and done, we're coming down to, I think, the 155 area, perhaps even into the 140s. And Facebook is now down on the year. Here, take a look at this. We'll do an overlay of the NASDAQ relative to the price performance of Facebook. And look at this ridiculous underperformance. For years, Facebook was a leading stock. It was an outperformer. Controversy hit. Management, in my opinion, fumbled the ball big time. And now we are seeing the share price of Facebook underperform the overall market. Simply a disaster area. This is what happens when you let your ideology influence your business decisions. And as for our friends over at Nike, these shares, while limping higher off the lows, I believe are to be shorted very, very soon. We may limp higher up to this upper band of resistance, but I will be looking to short into any strength with an opening position, then building aggressively on a break. Because the markets do not have priced in the idiocy, the absolute idiocy of making that decision, whether or not you agree with it or not, of entering the political fray by extending a contract to Colin Kaepernick for 10 years. So I think Nike is dead man walking right now, and we'll be looking to short it. Let's get to the pre-market activity. By the way, folks, if you're not currently a member, before we get started here, if you're not currently a member, sign up for the 14-day free trial offer, or if you're not ready, which is cool, follow me on Facebook. Enter your email address on the website. We hate spam too. And you'll receive best stock charts, which I'll be sending out tomorrow to those members on the email list. All right, let's begin with the pre-market activity on the NASDAQ, where there's a lot of action happening. We are down nearly a quarter percentage point on the morning. What I'm looking for here on this chart is a break below this lower band of support. Now, we broke this prior support level yesterday. Now we're doing a dead cat bounce, absent our ability to close above this upper band of resistance, which this bar will close out at 9 a.m. Eastern Standard Time. Our failure to do that will in all probability cause a break below this lower band of support. RSI, very, very weak. We have a 20 handle on the 4-hour RSI. So the RSI has been validating the weakness on the NASDAQ. We have no positive divergences to speak of. So I would stay nimble this morning, folks. Let's take a look at the S&P futures. They broke support yesterday. I think we have a lot of problems here. Now, we are currently short of the semiconductor sector. That is now a profitable trade. We are short of Facebook. That is now a profitable trade. Do we have positions which are struggling now? Yes, we do. And we're going to be looking to lighten up on those positions in the banking sector in particular. Now, the only caveat is if we see a rally in the 10-year yield. We'll go to the chart of the 10-year Treasury note in a moment. But before we do that, let's stick with the S&P 500. You can see that we're rallying off of this third standard deviation Bollinger Band. We are flashing topping tail. So what this chart is implying to us is that what was support is now resistance. And once we break, and we're already beginning to start the break, but we haven't closed out the bar yet, right? So we have until 9 a.m. Eastern Standard Time. We could rally back for all I know. We have the jobs data coming out in a little while. That could change this chart dramatically. If it comes out weak, the S&P 500 could rally. Why? The Federal Reserve would go into a pause mode. Which they've already indicated, if it comes out strong, the S&P 500 could rally. Why? It's a sign of a healthy economy and that the economy may be able to absorb a couple of more rate hikes before we begin to stall out. So we're not quite sure at this juncture, given the mixed messages out of Washington, D.C., or for more specific purposes, the Federal Reserve, we're not quite sure how the markets will take this. Is there a belief that the Federal Reserve will pause on their December rate hike if we get weak economic data? If there is, if that's the prevailing whisper rumor out there, well, then the markets can rally. If not, if there's still a strong belief that we're going to get a December rate hike, a strong number could hurt the market. So it's going to be an interesting report this morning. Now let's get to the 10-year Treasury note. We are down slightly, but we're showing signs of strength here. Note the double bottom setup, or W formation. Here is the left side of your W. Here's the pivot point. Here is the right side of your W forming. What we're looking for here is a rally up and through the pivot point. Do we have it? We have a breakout above resistance. We are consolidating, retesting the breakout point. We haven't broken out yet, but the stage is set for a rally in the 10-year Treasury note. What will that mean if yields decline? It means that you'll see weakness in the banks. You maybe see a rally in the overall stock market, particularly in tech, and you'll see commodities, particularly the miners, the metal names, they should rally as well on weakness on yields. As for oil, down this morning, lower highs, watch for a break below 76. That would be a problem. It appears as though we're consolidating a bit here this morning. The U.S. dollar, consolidating, holding support. So what we're looking for here is either a break of this lower band of support or a rally up and through this upper band of resistance. So the jury is out on the dollar right now. As for gold, gold is actually looking pretty good. When you take a look at the 4-hour chart, let's go back to the dollar. You have relative strength on the dollar, which is beginning to hook up, but it's below 50, in the 40s. But juxtapose that versus gold, and gold is sitting above a breakout point. We have RSI, which is beginning to hook back up yet again and above the 50 level and sitting with a 50 handle. So gold, technically to me, is looking a bit better than what is the dollar on a 4-hour chart, but that's a short-term chart, right? So we don't want to use simply a 4-hour chart to guide our trading decisions. We want to view the daily chart, weekly chart, and our intraday charts as well to determine which is the new path of least resistance for any one of these names. Bitcoin, what a dump this thing took. Amazing how much we are down. We are down over 15% off the highs of the week. So Bitcoin is now trading back down below a support level. Watch for a break below 62.15, because if we break below that level, we will probably head all the way back down here to the recent lows. And that low was at 59.10. And that is really critical support for Bitcoin. RSI rolling over here. So I would avoid Bitcoin. And that is it for this morning, folks. Everybody have a profitable trading day. Please hit that subscribe button. Follow me on Facebook, Twitter, etc. And enter your email address. We hate spam too. Get best stock charts tomorrow. That'll be sent to your inbox. Have a profitable trading day and be well.